Industrial output registered negative growth for the second month in a row, declining 0.5% in January. This figure is marginally better than the negative 0.6% clocked in December, but marks the first time in 16 years that industry shrank for 2 consecutive months. On What's Hot Tonight, we ask, is the worst behind us? Joining us, Atsi, Sheth, Chief Economist of Reliance Equities. Atsi, many thanks for joining us. If you look at the fine print, at least in terms of the December number, that was minus 0.2 to 0.2 that's been revised. Do you get a sense that perhaps there might be recovery in the months going forward?
Certainly, but it really depends on what your view on the monsoon is. If the rains are good, in June to September, then the worst is certainly behind us. If the rains are bad, I think there's a further challenge to come. But what the January numbers showed really to me, Harsha, is that the economy had 4 different shocks coming to it. The commodity price shock in early 2008, the interest rate shock from the RBI raising rates in 2008. Then you had the global, financial crisis, which was the third one, and then the global trade shrinkage that you had happening towards the end of 2008. All those 4 combined, and you found that industrial output in India degrew only by 0.5. Compare this to what happened in South Korea, Brazil, Russia, all of those countries registering negative growth in double digits. So I think this was actually a surprisingly good outcome, even though it was negative twice in a row.
Well, that's right, Atsi. In fact, a lot of, research reports that are out post those IIP numbers seem to suggest that we could possibly see a revised estimate for the fourth quarter GDP numbers, which would come in at 5.3%. And there is also the hope that the agriculture estimates will also be revised upwards. What's the sense that you're getting?
The same as I think consensus now, that, the GDP numbers for that quarter, October to December, for manufacturing at least, it was 0.2, I think, percentage growth. And with the December numbers now being revised, I think that number will be revised up. But of course, the big revision in GDP numbers in October to December will, I think, come from agriculture, which will be revised up from the minus 2.2. And that's a good thing for manufacturing as well, because remember, agriculture provides the demand for manufacturing going forward. So if agriculture is revised up, that means that at least in the current quarter that we're in, Jan through March, you'll see manufacturing benefiting from that.
I see there's been some spark, at least in the auto sales numbers, if you look at, or if you probably look at cement or steel production. Would you consider that a blip, or perhaps a little more optimistic on that note?
It's hard to say. Traditionally in developed economies, autos are an excellent indicator, an excellent leading indicator of growth cycle. You know that once autos pick up in the US, in the UK, and anywhere else in the developed world, you're on to the rising growth cycle. India is a different case. The structure of the economy is such that autos cannot be considered sort of an holistic indicator of growth, but I think they're an important one still. They tell you a little bit about the interest rate cycle. They tell you a little bit about broad-based demand. And I think, insofar as they're telling us about that, it's not a blip. Cement, again, is telling us perhaps more about government spending than it is about private sector spending. I don't think private sector construction spending is going through a huge impetus right now. I think really the demand is coming from the government sector on cement.
What about the growth in capital goods, Atsi? Because year on year we've seen it jump, but it's also come off a fairly sort of low base. So would you read too much into the kind of move we've seen on the capital goods side?
No, there's a 15% jump on a year-on-year basis, but if you look on a month-on-month basis, it's actually a decline in double digits. So I tend to agree with you that it's really a statistical aberration, but I'm not so worried about capital goods. I don't think, at least in the next 6 months or so, capital goods is what's going to lead us into the recovery cycle. It has to be consumer goods, because if domestic demand is the India story, then it has to be consumption that recovers first and capital goods later. So I think that those numbers will probably remain subdued, but I won't be too worried about that.
Let's look at the road ahead now, Atsi. At this point in time, clearly from now to the elections, you're not going to see any more measures coming in from the government. Inflation is continuing to cool off. Do you expect the RBI to step in with further rate cuts?
Oh, absolutely. I think the RBI has, it has to, and it's been doing exactly the right thing, which is doing it in a calibrated way so that the market retains sort of hope going forward. At the same time, it's calibrating it to what the needs of the economy are. Money needs to be cheaper, but it needs to be cheaper as recovery takes hold. And so, the RBI definitely will lower rates, and that's included in my forecast for a recovery later on this year.
So how confident are you, Atsi, at this point in time? Do you think, just in terms of the level of optimism, do you think that the mood has changed now?
The people I talk to still seem to be suffering from pessimism, at least, and I think that pessimism is sort of well received from my perspective, because things had gotten a little bit too optimistic about a year or so ago, and we're recovering from that. We're seeing that, well, the Indian economy is resilient, but if you deal at 4 shocks in a row, it's going to slow down, and that's indeed what's happened. But I think what will happen in the next 3 or 4 months, you'll see global data perhaps bottoming out. You've seen that in some pockets abroad in the US and in the UK. Over the next 3 months, you'll see that all is not going downwards fast. Some things at least are plateauing at a lower level, but they're plateauing. That's one thing that I think will lead to some optimism returning. At this time, I'm seeing more pessimism than optimism, frankly.
All right, Atsi, we'll leave you on that note. Many thanks for joining us.